I wanted to start. I promised we would take a quick look at COT data. Frank, what stuck out to you on the COT side of things? Anything interesting this week?
Well, they're buying indices. That
Hmm.
was pretty obvious from last week. They slightly bought gold, I guess. Um, so I'm not sure. Gold, now that it ran too high, it also fell way too hard in that short period of time. So I don't really know where gold's direction is going to be in the short term, but um, I feel like it has overextended on both sides. It's kind of got to chill out before it makes a move. But uh, yeah, so I guess what I'm bullish on isn't always, well, it's not lining up with this exactly. I'm bullish indices, but I'm also bullish Bitcoin, but that's not very,
Hmm.
that activity last week was a majority sell. Um, I would say overall though, it looks like risk on. It looks like risk on sentiment from smart money. Um, I know they're buying dollar, but they're also buying everything else. Um,
Sure.
Shorting oil. It just looks very it just looks like a very active market for risk on right now. So that's where I'm at.
Gold, I knew when I took the trade that it was aggressive because again, you had those big spikes and to be fair though, sometimes if you look at the great runs on gold, that's how they start. They look almost so extreme that it's like it barely pulls back before rocketing again. And so I was taking an aggressive entry and unfortunately, it didn't work out. So we will watch to see. I still think that it has potential to go back and retest these highs, but currently the way price action is working, it's not looking very promising. Here's the 4-hour chart. It's completely broken support, no longer in the bull's control, I would say. So it's worth watching. Frank, what do you think about gold? Do you think so? You pointed out that it seemed to have gotten a bit extreme on the upside, and now you just said, as we joined the call, that perhaps you think it's starting to get a little stretched to the downside. What are your thoughts?
Yeah, so that was like over 7% drop from the highs, and that's
Mm-hmm.
only, I don't know, 6 days worth of trading. So
Yep.
very hard move on gold in a short period of time. Granted, like this whole month from October to November was a big move, and then November to now, up until the highs, was another big move. So it did get overextended in a short period of time, but it also sold off arguably harder than it did making that move to the upside. But
Mm-hmm.
crossing under this trend line and support, closing underneath that, and today it's still working its way down. I think I think it's best not to trade it right now, not to look for any buys currently. Wait for it to hit some support like around 1939, 1940. That's another like 2% drop, I think, and then just keep looking at further lows. I don't think it'll go back into the 1800s, but um, just I think just keep looking at support levels and see if a price is bouncing off and try to take or maybe take a chance and see if it will move higher and then keep your stops tight. But this looks pretty bearish on the daily chart, and I think a lot of assets like the S&P, um, GU, EU, gold, they're all going to continue to move down at least for today until we get those CPI numbers. Because I was going to ask you what you thought about that, Nick. They're all coming in mixed. We have benchmark coming in lower. We have core coming in hotter, which is what the Fed looks at. And we have standard month over month unchanged. So what in terms of like CPI, I know
Mm-hmm.
we all want lower CPI across the board, but what would you be happy with if we saw mixed numbers like this?
Want to stay up to date with all the latest trading information? In the description below, you'll find the link to join our free Discord. The Discord gives you instant access to lots of helpful material like free trading courses, chart analysis, updates about what's happening in the A1 community, as well as discount codes for our other products and services. The best part, all of this and more is 100% free. So go down in the description below this video and check it out for yourself. If you're interested in upgrading to the full VIP Discord featuring our team of expert trader signals, you can use the live chat link in the description to get connected with one of our team members in seconds. So don't wait, go check out the free Discord today.
Yeah, so I think you definitely bring up a good point there, and we're gonna definitely have to pass that question to Ivan as well too. But I think in terms of inflation, last week on Friday, I think the market kind of showed where it's at. We talked about this a little bit offline, Frank. We were talking about how as long as the trend overall stays intact, meaning the economy stays alive, jobs don't completely die, and we see, generally speaking, disinflation happening, even if it's slow progress, progress is progress. I think that most likely, even if we see inflation coming out just as expected, as all those numbers are expected, I think that still kind of bodes well for the dollar downtrend, because right now, rate hikes being threatened were what was so prevalent to a stronger dollar and crushing the markets, and we just don't have that same looming fear. So I think it takes a lot for that to shift both ways. Frank, you and I were talking about when it comes to jobs numbers, we were like subpar numbers or decent numbers. Right now, the path of least resistance is stocks and equities rally, and dollar drops. It has to really prove. I think the burden is on dollar bulls to produce something that changes the new narrative again. So I think unless you see something very surprising on tomorrow's data, the market's going to find a way to stay within the trend, the 3-month rolling trend of disinflation. So I guess that's kind of where I would lean. Ivan, what do you think? Dollar tomorrow, CPI, of course, probably one of the biggest movers. What do you think? I mean, to Frank's question.
I think that if we get lower than expected, we're going to go dollar bear, or market's going to go dollar bearish. If then the Fed also delivers a dovish message, or less hawkish, I think the move's going to be Tuesday, and then Wednesday kind of dies out, maybe 50 pips extra, but it's kind of dead on arrival if we get two of the same. But if we get an opposite reaction, if we get dollar bullish tomorrow because of CPI and then dovish on Wednesday, you're going to have 100% pullback and back to square zero. But then you have ECB on Thursday and Bank of England on Thursday, I think, first I remember. So trading your dollar this week is going to be volatile.
Although I haven't traded very well recently on gold, I took this loss, but before that, I've had several good trades on silver. Silver has actually been a better performer for me this year than gold. A lot of it has been options trading. I've sold a lot of calls and a lot of puts on silver, which, if you know much about options, generally a sideways market is actually pretty good for options. And silver, although it's really underperformed in terms of gold's crazy volatility, the sideways range I've basically sold puts, sold calls on this. The sideways action has been really good. So I've made a lot more positive returns on silver than I have in gold, at least in this year. But this year has been, again, usually I trade a lot of gold or I trade a lot of indices, and it's rare that I'm trading a lot of both at the same time. This year has been much more indices focused for me than anything else. A lot of NASDAQ, a lot of S&P. So yeah. Ivan, you mentioned the euro and the pound. Of course, with the ECB, the Bank of England, you mentioned volatility. That's probably a great point, especially with euro sitting at support. It's sitting right here off the daily chart at this 1.075 level. What do you think is going to happen this week? Is the ECB going to, again, they're seeing slowdown as well. Are they going to come out more dovish? What do you think?
I think it is bad, but yes, dovish. Euro is probably going to fall more than anything else on Thursday. So maybe up Tuesday, down Wednesday, down Thursday. I wouldn't buy
Yeah,
Euro
it'll
this
be.
week.
I was gonna say it's a tough call because you got two central banks that both seem to be kind of in the direction. And Frank, I want to come to you on this too, because if you remember, 2022, it was all about which central bank is going to rate hike sooner, faster, more frequently. And of course, the dollar really steamrolled ahead because it saw a massive amount of rate hikes in a very quick succession. Now I think that the tables have turned a little bit. Now the question is, who's going to rate cut sooner and who's going to rate cut faster? So I guess, Frank, in terms of currency side, is there anything that sticks out to you? I think we've talked a little bit about the Bank of Canada perhaps being one of the first ones to act. Now that we've flipped the script, we're now looking at things from a rate cut race rather than a rate hike race. What do you think about currency wise? Anything stick out to you?
I don't really know what any central bank is going to do because the Fed and all the other banks talk about how it depends on the data, but I know that they're going to do what the Fed does. And if the Fed is going to stay the same, unchanged, and if they're going to talk about cutting rates and doing that, then other countries will do the same. And I don't know what the rate at which other countries will do it, but I think that dovish tone will happen at pretty much the same time around the world. And it will then ultimately be, I guess, more so bearish on the dollar, just because the dollar is kind of that safe haven. So if you have euro against dollar, pound against dollar, CAD against dollar, those are going to be the ones that I think will be stronger. So that's where I get that risk on sentiment, is because we've been hiking all year or most of the year, and then the other countries have followed, BOE, BOC, and now we paused, they paused. The second we talk about cutting is the second they're going to talk about cutting, and then when we cut, they'll do the same. So a lot of countries can't really afford higher interest rates, borrowing costs and stuff. So I think it's going to pretty much be at the same time. But having said that, the dollar is going to be the weak one out of them all. Because
well, here's a question for you, Frank, just to throw one into your commentary. Talk us through this dollar yen pullback, because you made a good point. They're going to kind of generally move together and follow each other in the Western side of the world, but maybe not so Japan. Japan talking about getting their interest rate above zero. So what do you think about this pullback on UJ?
They've done this before, and I think I might have got fooled again by the BOJ, where they talk about eventually being more restrictive on monetary policy, and then they say never mind, and then we get a move like this. So I was short UJ, and it came all the way down to my TP, didn't hit it, or didn't execute, I guess, for some reason. I stayed in, and it closed me out for a stop loss. And that was one of the more disappointing trades I've ever had. But look at this recovery. It was just this flash sell. And then it was just like, oh, you know what? Never mind. So I don't know. This could just be pure manipulation. That was a lot of money to move that, and obviously it doesn't look like the sentiment has really, what the BOJ said, has really impacted it, because look where price is now. It's pretty much paired this entire candle. So I don't know. They could just be flat out lying, or they could, if they're serious, then it is that sort of downtrend idea that I'm hoping for. But they could just be saying, they could be on their usual stuff again.
I've got UJ pulled up here. I think this is kind of interesting. Pretty much flat for the month of December. However, it's been down quite a bit, UJ specifically. But I want to point to, looking ahead to 2024. January, in the last 10 years, what we can see is there's been an average of a 0.92% decline on USD JPY. So it's kind of interesting to point that out. At the same time, a comparable market, very much to Ivan's point, cross-examining things like gold and UJ and the 10-year yield, for example. Historically, on the last 10 years, the blue chart here, we must have had a big pop in the last 5 to average that out. But the last 10-year average, 0.59% down in the month of January. So I guess my point is seasonally, perhaps there's a little bit of downside coming for the UJ pair. I think, Frank, although the sell didn't quite work out, and I think you might have gotten robbed a little bit there. That's really unfortunate. You didn't get triggered on the take profit. That sucks. And it's definitely happened to me as well. I think what's interesting is that this pullback, in my personal opinion, I am dollar bearish, and I cautiously yen bullish. It's hard for me to even say that because I've been so bearish on it for so long. But I guess
think about it.
Go ahead.
Oh, sorry. I thought you had finished your thought. Go ahead.
Go ahead.
I was going to say, if you think about it, we're waiting for these CPI numbers. Obviously, we're not going to hike anymore this year, at least. And this could just be a setup for further dollar shorts. And this could be a setup for gold longs. Mm-hmm. I feel like the more gold sells, the better chance we have at getting a good value. Because, we were trying to get in. I was looking to buy gold somewhere in the 2000s range. This was before it broke the highs, though. It was like somewhere, if it broke this high, I was going to look to get long. And I kind of missed it. I didn't get long, but it would have worked out pretty well. But now that it's down here, it's like, well, I was trying to get in at 2000 with the same sentiment. Now we're at 1980s. I feel like we're just gonna have to let this move run a little lower, just let the selling pressure play itself out. But I think that what you're saying is, continue the trend dollar bearish. And I think that's what it's kind of setting up for. And I guess that's also what I'm hoping for. So it could be biased, but.
Sure. No, I think it's worth mentioning. I did also pull something up just to take a look at while on the topic of the yen. This is the week-to-week chart on USD and JPY COT data. It's still not quite there in terms of smart money. Smart money still seems very heavily net short on the yen. But this will be interesting to check back in on in the future weeks to see if perhaps the yen shorts kind of come off and yen longs come on. It'll be interesting to watch what smart money does, but nothing signaling too much of a reversal just yet on the yen. But I imagine that could shift as time goes on and as the yen potentially strengthens due to commentary out of Bank of Japan. But again, to your point, Frank, it's a little bit of fickle. They've and Ivan, you've talked about this many times, right? Where we get these comments from the Bank of Japan, market reacts, and it completely rips back the other way.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.